So good evening. So back to the next topic, composition level. So section 10 of the CGST Act 2017. So if any person who obtained the registration under the provisions of the CGST Act, he has to comply with the all procedural aspects and he has to comply with all provisions of the CGST Act. But so it is not possible to comply the all procedural aspect by some parties. So to simplify the respected procedural aspects, this composition scheme was introduced. So it is an optional scheme. It is an optional scheme provided to the registered person who wants to opt can opt it. But who are eligible for opting the composition scheme that was stated under section 10.1 and section 10.2a, section 10.1 and section 10.2a. So section 10.1 is applied for. So section 10.1 is applied. So a registered person, when his aggregated turnover in preceding financial year is less than or equal to 1.5 crore, then that party is eligible for opting composition scheme. So, if the previous year aggregated turnover does not exceed 1.5 crore, then in the current year he is eligible for opting what composition scheme. So, but that 1.5 crore turnover is restricted to 75 lakh in some states. So, how many states are there? 8 states. That is Arunachal Pradesh and Manipur, Meghalaya, Mizoram, Nagaland, Sikkim, Tripura, and Uttarakhand. So these are called as what northeastern state. But all northeastern states are not opting the 75 lakh limit. Out of the northeastern states, Assam and Himachal Pradesh and Jammu and Kashmir. Assam, Himachal Pradesh, Jammu and Kashmir. So these three states opt 1.5 crore limit. Other than these three, the remaining all northeastern states opt 75 lakh. So in these states, in these 8 states, so when the aggregated turnover in the preceding financial year is less than or equal to 75 lakh, so those are eligible for opting composition scheme in the current year. Composition scheme in the current year. But this is applied to this section 10.1 is applied for goods. So section 10.1 is applied for goods. For example, generally in some cases, so majority of the entities will provide small element of the service along with the good. Small element of the service along with the good. So for example, so section 10.1 is applied for retailer and as well as what a wholesaler of the good, and it also applied to the restaurant. It also applied to the restaurant service providers. It also applies to what restaurant service provider. So, but for example, if these parties coming to the retailer and wholesaler who involves in providing these services along with the goods, who involves in providing these services along with the goods, then is that section 10.1 is applied or not applied? Section 10.1 is applied or not applied? So section 10.1 is applied if the value of this service is less than or equal to the respected threshold limit. If value of service less than or equal to the threshold limit, then how to calculate? That was clearly stated. So if the value of service involved in the supply of goods throughout the year is less than or equal to 10% of the turnover of the state in preceding financial year, 10% of the turnover of the state in preceding financial year, or 5 lakhs, whichever is higher, or 5 lakh, whichever is higher. So, if the person who involves in supply of good as well as supply of services, whether section 10.1 is applied or not applied, depends upon the value of service involved in the whole supply throughout the year is less than or equal to 10% of the turnover of the state or union territory in the preceding financial year, or 5 lakh whichever is higher, or 5 lakh, whichever is higher. For example, if the previous year aggregated turnover, if the, sorry, for example, previous year turnover is 75 lakhs, then what is the 10%? So 10% is equal to 7 lakh 50,000 and or 5 lakh, whichever is higher, 7 lakh 50,000. So in the current year, the value of service involved in the overall supply should be restricted to 7 lakh 50. So if the value of service is less than or equal to 7 lakh 50, then section 10(1) is applied. If the value of service more than 7 lakh 50,000, then section 10(1) is not applied. In that case, section 10(2)(a) is applied. Section 10(2)(a) is applied. Okay, so coming to the section 10(2)(a). So section 10(2)(a) is applied relating to the service providers who involves in providing the services other than restaurant services, and another one is so suppliers who involves in supply of a good where the value of supply exceeds the threshold limit, exceeds either 10% of the turnover of the state in previous year or 5 lakh, whichever is higher. So this, so in case of service provider, so what is the limit of what is the turnover limit for opting the composition scheme is nothing but what 50 lakh. So the person who involves in supply of services where his aggregated turnover in preceding financial year is less than or equal to 50 lakh, then he can apply for composition scheme. He can apply for what? Composition scheme. Okay. So coming to the section 10(1). So section 10(1), section 10(2)(a). So here this section 10(1) is applied for supplier of goods and so the restaurant service provider, supplier of goods as well as the services, supply of goods as well as services where the value of supply less than or equal to 10% of turnover of the state in preceding financial year or 5 lakhs, whichever is higher, or 5 lakh, whichever is higher. So that section 10(1) is applied in these three cases. But section 10(2) is applied for supplier of services and another one supplier of goods and services, supplier of service goods and services where the value of supply is more than 10% of turnover of the state in preceding financial year or 5 lakhs, whichever is higher, or 5 lakh, whichever is higher. So section 10(2)(a) applied in that case. Then, so section 10(1) is applied. Okay, section 10(1) is applied when the aggregated turnover in preceding financial year is less than or equal to 1.5 crore or 75 lakh. This 75 lakh is applied in 8 states, northeastern states except Himachal Pradesh, Assam, and Jammu and Kashmir. And this applied when the aggregated turnover in preceding financial year is less than or equal to what? 50 lakhs. Is less than or equal to 50. Then in the current year, that party is eligible for opting composition scheme. Okay. Then first before that, what is the aggregated turnover? So aggregated turnover includes it includes all taxable supplies and all exempted supplies and all exported supply of goods or services and interstate supplies in between distinctive persons are to be computed on pan India basis, and it does not include GST and compensation cess and the value of inward supply on which tax is payable under what? Reverse charging mechanism. So aggregated turnover include these all things: taxable, exempted and exported supplies and interstate supplies in between distinctive person to be computed on all India basis, but not include CGST, SGST, UTGST, IGST, CIS, and value of inward supplies which are covered under reverse charging mechanism. And remember, while calculating the aggregated turnover, we also required to exclude one thing, that is nothing but interest received on deposits. Interest received on deposits. So services provided by way of extending the deposits, loans, advances, insofar as the consideration is represented by way of interest or discount. These are also excluded. So remember, for the purpose of section 10, actually this is an exempted supply. This is an exempted supply. But for the purpose of section 10, it is excluded from the exempted supply and is covered under exclusions of the aggregated turnover. Exclusions of the aggregated turnover. And one more thing is, so here while calculating the aggregated turnover, we have to consider the value of supplies from the 1st April of the financial year up to the date of his becoming liable for registration. From the 1st April of the financial year. So the value of supplies from the 1st April of the financial year up to the date of his becoming eligible for registration. That value of supplies are also included. Okay, so this is what is meant by an aggregated turnover. In case of section 10.1, aggregated turnover limit 1.5 crore or 75 lakh in preceding financial year. But coming to the section 10.2a, aggregated turnover limit is restricted to is around 50 lakh. And eligibility already we discussed. This is the definition for aggregated turnover. And scheme will be applicable for all goods. So scheme will be applicable for all goods. For example, if the party involves in supply of two goods, product A, product B, and the party wants to opt a regular scheme for product A and composition scheme for product B, is it possible? No, that is not possible. If the person opt the composition scheme for one product, then it all apply automatically to the all products or to apply automatically to the all premises or all product which he deals and which are registered under the same part. For example, if the party opted to pay the composition scheme for one of the premises registered under the same PAN, then automatically all other premises registered under that PAN are ineligible for opting composition scheme. So if the party wants to apply the composition scheme, then apply it to the all goods. Apply it to the all goods. Next, coming to the rates. So in case of the manufacturer, and what is the composition rate? So CGST 0.5, SGST 0.5, total 1%. So this 1% is applied on turnover of the state. So turnover means what, sir? Taxable turnover as well as exempted turnover, if any. But coming to the trader, so this 0.5 plus 0.5 1% is applied on the taxable turnover of that state. In case of the trader, turnover does not include exempted turnover. It applies only on taxable supply of goods only. And coming to the restaurant services, 2.5 plus 2.5, 5% on the total turnover of the state. In case of service provider, 3 plus 3 equal to 6% on the turnover of the state. But here, so what is meant by turnover? What is meant by turnover? So turnover includes what? All taxable supplies and all exempted supply. But remember, these exempted supplies are not included in the turnover for the purpose of trader. In case of trader, only taxable turnover is liable for GST. Exempted turnover is not liable. But it does not include CGST, SGST, UTGST, IGST, cess, and value of inward supplies on which he is liable to pay the tax on reverse charging mechanism, along with that interest received. The value of exempted supply of services provided by way of extending the deposit or loan or advances insofar as the consideration is represented by way of interest or discount. And remember, While calculating the aggregated turnover, the value of supplies from the 1st April of the financial year to the up to the date of his becoming eligible for registration are included while calculating the aggregated turnover. But while calculating the payment of composition tax and while calculating the turnover for the purpose of the payment of the tax, so the value of supply from the 1st April of the financial year till the date of his becoming eligible for registration are not included. Are not included. Those are not included. Clear? So, for example, so for example, so in the month of April to June, the party earned around 20 lakh, and in the month of so July, August, September, the party earned 30 lakh. October, November, December, the party earned 50 lakh, and January, February, March, the party earned around so 25 lakh. This is the turnover of the current year, and the party involves in supply of services. If the party involves in what? Supply of services. So in that case, what is the, for example, the party started business in the current year. He started business in the current year itself. So when the party, when the turnover exceeds 20 lakh, he obtained the registration. And at the time of applying for registration, he applied for composition scheme. He applied for what? Composition scheme. He applied for what? Composition scheme. Then, so here the here here the composition scheme. So in case of first year, in the first year of applying for in the first year of applying for registration, means the party doesn't have any business in the previous year. So in the first year, he can opt for composition scheme. Once the composition scheme is opted, he is liable to pay the tax at reduced rates under composition scheme in the current year up to 50 lakh only. Up to 50 lakhs only. So here, so 50 lakh means, so while 50 lakh of the current year turnover. So here, while calculating the turnover of the state, the turnover of the state, then the value of supplies in between 1st April to the date of liable for registration. Value of supplies in between 1st April to the date of liable for registration are excluded, not included. Those are excluded, but are excluded. And but while calculating the eligibility criteria for applying the composition scheme, that was included. That was included. So, but the party apply for registration first time in the current year. At the time of applying for registration itself, he opted the composition scheme. So that party liable for registration on the last day of 30th of June. So he opted the composition scheme. So the last day of 30th June is said to be the last day of June is said to be a date of liable for registration. So the supplies in between 1st April to 30th June are not included in the total turnover. Are not included in the total turnover. Then on the next 10 lakhs, on the next 30 lakh, so then composition scheme is applied. So nothing but 3 plus 3, how much? 6% rate is applied. But in the current year, composition scheme applied only to the extent of what? 50 lakhs only. Only for the extent of what? 50 lakh. So, sir, this 20 lakh is not included in the so turnover. So, this 20 lakh is not included in the turnover for the payment of tax purpose only. For the purpose of the payment of tax only. But it is included in the 50 lakh limit. It is included in the 50 lakh limit. After 50 lakh, so by the end of the second quarter, the total turnover the total turnover of the company is around 50 lakh. Then the later that party has to withdraw from the composition scheme. From the October onwards, we need to pay the tax and the regular scheme. under regular scale. Clear? So aggregated turnover, while calculating the aggregated turnover, so the value of supplies from the 1st April of the financial year, so to the date of is becoming liable for registration are included. But for the purpose of calculation of the payment of tax in the current year, while calculating the turnover, that element is excluded. That element is excluded. Next. Person engaged in marginal supply of services. Already we discussed. So if the person involves in supply of good as well as supply of services, then it is treated as a supply of good or supply of service. Depends upon the value of supply involved in that whole supply. So if the value of supply involved in that whole supply is less than or equal to 10% of the turnover of the state or union territory in the preceding financial year or 5 lakh, whichever is higher. If the value of service is less than or equal to the threshold limit in the current year, then that whole supply is treated as supply of a good, then section 10(1) is applied. If the value of supply is more than the respected threshold limit, then the whole supply is treated as supply of services, then 10(2)(a) is applied. Then 10(2)(a) is applied. So clear. So for example, Mr. A is a previous year aggregated turnover is around. So his previous year aggregated turnover is around 70 lakhs. Previous year turnover is around 70 lakh. So current year, for example, previous year turnover 40 lakhs. So 40 lakh. Current year turnover is around and 45 lakhs, which is inclusive of value of service of 6 lakhs, which is inclusive of what value of service of 6 lakhs. Then, so apply, so composition scheme, whether section 10(1) is applied or section 10(2) is applied. So remember, so then we have to apply 10(1) first and then later 10(2)(a) first, 10(2)(a). So coming to the 10(1), section 10(1). So here is the previous year aggregated turnover is less than or equal to 1.5 crore. So that party is eligible for opting composition scheme in the current year. But whether section 10(1) is applied or not, because in the current year that party involved in supply of good as well as supply of service, then we need to verify whether marginal value of service is less than or equal to threshold limit or not. So value of supply, value of service is less than or equal to what? 10% of the turnover of the previous year. What is the turnover of the previous year? 40 lakh. Nothing but, so 40 lakhs into 10% equal to 4 lakh, or 5 lakh, whichever is higher. So how much? 5 lakh. But the value of service involved in the current year turnover, how much? 6 lakh. So section 10(1) is not applied. So because section 10(1) is applied, if the party involved in supply of a good, or if the party involved in restaurant services, or if the party involved in supply of good as well as services where the value of service is less than or equal to threshold limit. If the value of service in the current year more than threshold limit, then section 10(2)(a) is applied. Section 10(2)(a) is applied. In case of section 10(2)(a), we have to consider what is the previous year aggregated turnover should be less than or equal to 50 lakh. Then in the current year he is eligible. Here what is the previous year aggregated turnover? 40 lakh. So as per section 10(2)(a), that party is eligible for opting composition scheme in the current year. But in the current year, he pay the tax as per section 10(2)(a) till 50 lakh. Till 50 lakh. Yeah. Next, conditions. So conditions and restrictions. The goods held in stock by him have not been purchased from unregistered supplier. Where purchased, he pay the tax under reverse charge mechanism. For example, if any goods are received from the unregistered dealer, then that party has to pay the tax under reverse charge mechanism to the government. Without, if the party does not pay the tax under reverse charge mechanism to the government, then that party does not eligible for composition scheme. Next, he was not engaged in manufacturing of the notified goods. So, manufacturing of the what is the notified goods? Ice cream, pan masala, and tobacco products, and aerated water. Aerated water. Next, he shall mention the composition taxable person not eligible to collect the tax on supplies at the top of a bill of supply. Bill of supply is nothing but the document issued by the composite dealer while supplying the goods or services. Next, he shall mention the words composition taxable person on every notice or signboard displayed at a prominent place at his principal place of business as well as at every additional place of business. And he shall pay the tax under section 9394 on inward supplies under reverse charge mechanism. Remember, section 10 is applied only for outward supplies. If any inward supplies are received from the unregistered dealer, then composite dealer is liable to pay the tax under reverse charge mechanism at regular rates, not at corporate composite rates. Then, persons not eligible for opting composition scheme. Persons not eligible for opting composition scheme. The first one is the supplier engaged in supply of goods or services which are not liable for payment of tax. Nothing but what non-taxable supply like alcohol meant for human consumption and petrol, diesel, motor spirit, natural gas and ATF and casual taxable person, a non-residential taxable person, and an interstate supplier of goods or services. Remember, there is no restriction on purchase of goods. You may purchase the goods, you may procure the goods either from the another state or from the another country, but only the restriction on supply of goods or supply outward supply of goods only. Outward supply of goods. And person supplying the goods through the ECO person supplying the goods through the ECO as per section 52 and manufacturer of certain notified goods, nothing but ice cream, pan masala, tobacco and aerated water. Next. So these parties are not eligible to opt composition scheme. So applicable for all transactions registered. But for example, if the party has one registration in AP and another registration in Tamil Nadu, another registration in Karnataka, and the party wants to apply the regular scheme for AP, then automatically he is not eligible for opting composition scheme for the other premises which are registered under same part. If the party wants to apply the composition scheme, then he has to apply for all the premises which are registered under same part, Next, validity. So, validity of this scheme. The benefit of the composition scheme can be applied up to the aggregated turnover of 1.5 crore or 75 lakh or 50 lakh in the current financial year. If that aggregated turnover exceeds, then the party has to withdraw from the composition scheme from from the next day onwards, he has to pay the tax at regular rates. The option availed by the registered person under section 10(1) shall lapse with effect from the date on which is aggregated turnover during the financial year exceeds threshold limit. Such person required to pay the regular taxpayer from the day he ceases to satisfy any condition. Further, he is required to file the intimation for withdrawal from the scheme in the prescribed form. What is the prescribed form? Form GST CMP 4 within how many days? 7 days of occurrence of such event. Next, he has to intimate the details of what inputs such as raw material, work in progress, and finished goods which are available on the last day of withdrawal from the composition scheme within 30 days of such withdrawal in form GST ITC 1. Then composition tax not so remember one thing. Once the party after the composition scheme is not eligible to collect the tax as well as is not eligible to transfer the input tax credit. If the composite dealer is not eligible to claiming the input tax credit as well as if the goods purchased from the composite dealer, that party is also not eligible for claiming the input tax credit. Okay, because composite dealer does not collect any tax from the customer. Then without payment of the tax, how can the customer claim the input tax credit? So input tax credit cannot be avoided and the penal consequences are there, and here section 73 and section 74 applied. Next, customers not entitled to take the credit of composite tax. So already we discussed the person who purchased the goods from the composite dealer is also not eligible to collect for claiming the input tax credit. Intimation for opting the composition levy. So intimation for opting composition levy, in that case, first, intimation by the person applying for registration or the intimation by the already registered person. In case of intimation, in case of the party who apply for registration, along with the registration, just he may select for opting composition scheme or not. So separate intimation and separate submission of the document is not required for opting composition scheme. But coming to the already registered person, so wants to apply for composition scheme, then he has to give the intimation in form GST CMP2 electronically through the common portal prior to the commencement of the financial year. So once they opted, then he has to give the intimation regarding the stock available on that day. A stock available on that day within 60 days, he has to give the intimation form GST CMP3, and then see then that goods are not eligible for claiming input tax credit from that day onwards. From that day onward. So this is about what composition scheme. This is about what composition scheme.